Hey everybody, it's Bob Trade Genius. Got my good friend Phil with me. Janet Yellen is building up a reservoir war chest of liquidity. We'll explain what it is, why she's doing it, and why you should care. Stay tuned.
Trade Genius.
Okay, Phil, we've been waiting for the Yellen bullet train to pull into the station, and it looks like she's all gassed up, raring to go.
Yeah. So I'll just jump right into the chart here. And the liquidity basically is the blue shaded area on the chart. It's a function of the Fed's balance sheet. Yellen's basically her checking account. And then also the reverse repo balance, which is the overnight lending pool that the Fed makes available to the banks to maintain overnight lending liquidity in the banking markets. So you combine all those and you get a net amount that's available to basically make its way into the markets. As that thing moves up and down, we have these signals that fire off and tell us, hey, it's time for risk on, meaning you want to own risk assets, or it's more of a risk off mode and you don't want to own risk assets. Maybe better to be in cash. And we've gotten a risk on signal fire off in the last few days, and the market's just responded extremely well to that. And I think it's going to continue. And the reason why I think it's going to continue is because A, you seasonally see this happen, and B, especially in an election year when they tend to prop the markets up going into the election, especially if you're an incumbent and you're trying to get reelected, even though it's supposed to be politically independent, the Fed and all that stuff, it ends up happening, right? So where we look for in terms of like how much more we can get out of this net liquidity, you have to look at the Treasury's balance, and she's got about almost 800 billion right now in the Treasury general account. She can draw that all the way down to next to nothing. That's happened before. That wouldn't be unusual to see happen. It's part of the process. So there's a lot of money between that and the reverse repo, which I don't have on here. The reverse repo has another 300 billion. So you got like $1 trillion that can slosh around and come back into the system. So when Bob and I talk about you need to be cognizant of a blow off top, that's where that stuff can come, that liquidity, that additional buying capital can come from. On top of that, it's not just that $1 trillion. They have, there's a leverage on top of that, right? So there's even more of an impact on the market. So, there's enough juice here. We could certainly see these new all-time highs be broken, and then that higher area of 6,000 SPX. And, I could see that happening until, as I mentioned before, then the market starts to look for the safety of bonds. And then this liquidity that's available at varying levels throughout the year will be used to get into bonds versus equities, because equities are really a value of forward earnings expectations and things like that. And if you're going into a recession, well, all of that stuff goes negative. And so then the yields and returns go negative as well on the stock market versus bonds. So as you can see, as the Treasury draws down, right, in the blue line, you can see the S&P 500. That's a positive effect as it goes up. So Treasury drawing down adds liquidity back into the system. That liquidity finds its way into the S&P 500. So as you can see here, we've been chopping in a range on that liquidity number, Bob. There's a lot of room to go down, and that can further push this market. You think you're high and up near all-time highs, and we can have another leg higher if they start enacting this, and I believe that they will over the coming weeks.
Everybody, is Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, and the only caveat is that you simply just can't go leverage long here and watch it, because there's some variables out there. There's the yen variable out there. There's the Iran variable out there. And the chart I'm going to show you tomorrow, there's a volatility variable out there too. So you're going to really have to take this day by day, week by week. But it certainly looks like at some point between now and the election, Janet Yellen's she's gonna open up the bazooka, and you're just gonna have to be on the right side of that trade. Phil, that's all I have. Guys, a new pair trade, a negative bear pair trade came out called YQQQ. So it's going to be an additional tool to be able to hedge as we go into 2025. And these are high yielding instruments paid monthly, and they're beautiful tools. So just want to give you an FYI on that. We're on top of it. We'll be trading it, and we'll be enjoying the fruits of that labor. We'll catch you guys tomorrow.
Trade Genius.